welcome. You're watching Buy Now, Sell Now on ET Now. I'm Shrishti Sharma, and with me as always is Cheryl D'Souza. And viewers, this is a show where you get all your stock-related queries answered by the experts. And we will also talk about today's Buy Now, Sell Now lens topic in detail and get the advice from our experts as well. Today we're going to be focusing on the microfinance industry. But before that, let's have a look at what the markets are up to. So Cheryl, once again, feels like the bears are back, but the strength is not that much.
Yes, absolutely, Shrishti, but I would rather call it a consolidatory phase or a pause that the markets have taken from that spectacular rally that it has witnessed. 0.5% downtick coming in for Nifty, and let's remember that this move is not in isolation. You're seeing actually Asian markets slip in trade, be it Hang Seng, Shanghai, all of them are actually pretty down and out. Remember that China releases manufacturing PMI data and it was worse than it was expected. So therefore, you can see that repercussion on Hang Seng, which was down about 2.5% last time I checked. You also had Shanghai that was down. And now Nifty is also trading lower by about 0.5%. SGX Nifty had also indicated that we will be in for a reddish start. Nifty Bank, that one is a tad bit using tad bit of underperformance in Nifty Bank when you compare it with the benchmark indices. So 0.6% or 0.7% downtick coming in for Nifty Bank as we speak. The brightest spot in the market, shockingly, is the broader markets. They are holding to positive territory. In fact, on your screen, as you can see, moving towards the day's highest point for the small cap index, 0.5% uptick coming in right now. Advanced decline ratio is neck to neck. So yes, nothing to complain about on that particular front. Talking about the sectoral indices, the pharma index bucking the trend, 0.8% uptick for the pharma index. IT index also seeing a strength of about 0.3%. But on the flip side is the metal, that is the top loser. Apart from that, you also have energy index that is seeing a decline of about 1% or so. So that's the way how the market setup is looking like right now, Shrishti. A lot of individual stocks that are moving on back of earnings. Also, you have SBI that's declining because it is trading ex-dividend today. But yes, that's the way how the market setup is looking like. A little bit, mild bit of negative on the screen.
Okay, but let's move on and let's shift focus to the microfinance industry and look at the move over there, Cheryl, because all these counters wherein names like Fusion Micro, Credit Access has been up anywhere between 30 to 40% on a YTD basis, and even good gains in Spandana Spurti as well as Statin Credit. What's happening in this particular space? So the easier regulatory norms have given a new flip to the demand in the microfinance industry, and that is evident definitely from the stock performance of these particular names mentioned earlier. Let's get in more details on how the valuation's stacking up and what's aiding this rally. And with all those details, our colleague Vamakshi is joining us right now. Take it away, Vamakshi.
Well, yes, the microfinance space is buzzing since a while now, and in fact, when you look at the returns that these companies have posted on a year-to-date basis, a stellar set there, and rightly so, because FY23 has been nothing short of a dream run for most of these counters. When we look at a Southern report that was recently released, the microfinance sector has reported a nearly 21% growth in FY23, and most listed players, as you can see, have outperformed the overall industry growth, led by Fusion posting a nearly 37% growth. The other counters with the likes of Credit Access, Grameen, Spandana Spurti as well as Satin Credit Care have also grown more than 20% as far as the AUM growth is concerned. The NBFC MFIs have also managed to gain market share at the cost of banks. The banks' market share has steadily declined since the onset of COVID-19, and NBFC MFIs now have the most meaningful share. The trend in fact shows that growth is actually leaning towards the NBFCs. And not just that, the asset quality for most of these counters has also seen a significant improvement, especially for Spandana Spurti, wherein the GNPA has declined on a sequential basis from 5.31% to 2.07%, and the other counters are also noting an improvement as far as asset quality is concerned. And not just that, going into FY24, the growth guidance for most of these counters also appears to be quite robust. Spandana Spurti is expecting to grow their AUM by almost 35% on a year-on-year basis, and the AUM is expected to come in at 11,500 crores, while Credit Access, Grameen and Satin Credit Care are also aiming for an AUM growth of over 25%. On the other hand, Fusion Microfinance does not see any challenge to their AUM growth. So largely a good set of numbers in FY24, improvement in asset quality and a good growth guidance going into FY24 is the reason why the sector is a buzz.
Thank you so much for that, Vamakshi, for putting into context why are the MFI companies performing so well and how and the commentary as well as how the companies look poised for FY24. In fact, earlier in the day, we did speak to Saturn Creditcare and Spandana Spurti, who remain bullish on the growth in the space that they operate in. Also, they're expecting the industry to post double-digit growth. What else did they have to say about the growth prospect for the industry, for individual companies? Listen in.
I think, it's been that the economy has really picked up in the rural space. The income levels are getting better and better. The monsoons, which have been fairly normal, the kharif sowing and every other, sowing in terms of the crops and pulses are far more better, and it's the hectareage area is increasing. The pent-up demand of the COVID, probably is also coming up. And to top it all, I think, for us to look at this, the states where we operate are practically under-penetrated in terms of microfinance activity. Now, once we say that pent-up demand which has been there because of under-penetration, all these activities probably being there, that stress is not there for microfinance, and that's for sure. And that's the reason why everybody is talking about a 25% plus growth, in the coming years as such.
One of the reasons that we can very clearly see is the improving asset quality. We've been in Spandana maintaining that this is a risk management business more than an asset management business. And hence, it's very important that if you are able to really manage the quality of the portfolio, the outcome will be the results as what you see. And overall, at an industry level, I think all the companies have done well in terms of really monitoring that key aspect. So improving asset quality is number one, is what I would want to put. Apart from that, most of the MFIs, or at least we are almost 90% rural. This is a credit hungry and a credit, the demand of credit in this segment, which is the bottom of the pyramid, and women entrepreneurs is pretty strong all through. And hence, if you look at the overall picture, the demand being strong and the quality being good, it augurs well for the industry.
Okay, so that was the management speaking of Saturn Creditcare as well as Spandana Spurti. But let's try and understand what our fundamental as well as technical experts are finding this particular segment. What is their outlook on the same, and any stock pick that they can recommend for a fresh buy out here. On to the show, we have Ashish Kyal, founder and CEO of Wave Strategy Advisors, as well as Mr. G. Chokalingam, founder and CIO of Economics Research. A very good morning to both of you, and thank you so much for joining us today on ET Now. Mr. Chokalingam, we have stacked up what's all aiding that rally in this MFI segment, as well as you have heard the management saying that the demand is pretty strong when it comes to the MFI credit. Among the four names that we are highlighting for our viewers, Fusion Micro, Credit Access, Spandana Spurti, as well as Saturn Creditcare, any of the names that you like for a fresh buy at this point in time, and what's your outlook on the sector?
Yeah, good morning. Just a regulatory clarification. I am not the CIO, I am head of research. This is required from regulatory point of view. Now coming to your question, there is no doubt microfinance companies have done phenomenally well, robust credit growth. I agree with you that even the future looks quite robust in terms of the growth. But most of that is in price already. Most of these microfinance companies are trading at 2 to 4 times gross book value, price to book value. And there are 4 concerns. So one has to be cautious. I won't say don't invest, but one has to be a little cautious. One, there is a structural change. You have a lot of new microfinance companies, payment banks, NBFCs. Then you have a large private bank, new private banks. Then the PSU bank consolidating and giving tough competition even in the rural areas. So this is one major structural change. Second, you have a lot of elections due apart from Lok Sabha election. Third, the valuation also, as I mentioned already, the little stretched already. And fourth, most important, monsoon. Yes, I am very happy that IMD has reiterated once again the monsoon will be good, but then there is still a little uncertainty. So therefore, I would advise caution. Only little risk-taking investors can, continue to hold or buy. Among these, I looked at it. Spandana looks a little better in terms of quality and growth. Otherwise, for retail investors, I would suggest, the quality names like HDFC Bank or Bank of Maharashtra.
All right, so that's the take coming in on MFIs. But on that note, actually, before I come to you, Ashish, we'll just slip quickly into a break and then I'll come back and try and get your view on the MFI space. And very good morning to you as well as Mr. Chokalingam and viewers. Welcome back. You're watching Buy Now Sell Now on ET Now. Let's take a look at what IRCTC is doing in today's trading session. Remember that our company has come out with its numbers. The stock is trading higher by about 1% or so as we speak. But we will be joined by the management of IRCTC in a short while from now. Remember that the PAT saw an uptick on a sequential basis as well as on a year-on-year basis. If you look at the revenue as well, it saw good growth if you compare it on a year-on-year basis. On a year-on-year basis, if you look at the revenue, they've come in at around 965 crore rupees. Let's bring on board Rajni Hasija, who's the Chairman and Managing Director at IRCTC, to talk more on the earnings. A very good morning to you, Ms. Hasija. Thank you so much for joining us on ET Now. And let me directly dive into your quarterly numbers. If you could tell us what exactly contributed to your revenue as well as your PAT growth in the quarter gone by. As I can see the numbers as well, you've registered a one-time gain of nearly 26 crore rupees. If you would help us to understand on basis of what did you get this one-time gain, as well as talk about your revenue and PAT in the quarter gone by.
Well, we have done very well in this year. Not only the overall full year, but in the last quarter also, quarter over quarter also, we have shown a recorded growth. If you ask me the numbers, the revenue in this year has been to the tune of 3,540 crores, and which is all-time high in the history of IRCTC, whereas we had given a revenue of 1878 crores in the previous year of the correspondence. And as far as the PAT is concerned, we have a 52.5% jump as compared to the previous year. And in all the business segments, be it catering, rail near, internet ticketing, and tourism, we have done exceedingly well and given a special growth in the case of tourism. So quarter over quarter compared to the previous quarter and year over year also, the growth has been seen.
Absolutely, Ms. Hasija. But Q4, if you look at the ticketing volumes, if you look at it on a year-on-year basis, or even for the matter of fact, if you compare it sequentially, it's actually been flat. If you tell us what contributed to that sort of a flat numbers coming in for ticketing volume. Also, how do you see internet ticketing revenues and daily average volumes shaping up going ahead?
The daily average volume of the ticketing are in the last year, it has been nearly 11.82 lakh tickets in a day. And if you're asking about the last quarter, nearly 10 CR tickets have been booked in the last quarter. So we see, as of now, we are booking nearly 82% of the total inventory available through online. Rest is being booked offline. So our revenue from ticketing is not only from the convenience fee resources from the ticketing, but accessory work related to the ticketing, that is, we call them non-convenience fee resources, which is nearly 33% of the total internet revenue. For example, our total revenue from the ticketing has been 66% is from the convenience fee and 33% is from the non-convenience fee. 802 CR this year we have received through convenience fee, that is pure ticketing resources, and rest 397 we have received through non-convenience fee resources, which includes various accessory services and ancillary services that we provide through our portal using the services of ticketing.
Okay, hi, very good morning, Mrs. Hasija. This is Trishti joining in. Since you were talking about your convenience fee, so any plans to increase the convenience fee going ahead?
As of now, we don't think of, but IRCTC board is empowered to take decision on the convenience fee. So board, so far we don't foresee any plans because the margins are already very high. So we don't intend to.
Okay, but if we talk about your margins, then there has been a decline in your margins, and that seems to be continuing in this quarter as well, on the back of higher contribution of the catering, which is a low margin segment in comparison with the internet ticketing. So, will the margin mix change going ahead, and where do you see the margins headed?
This margin, if you recall correctly, the margin, this same kind of a margin used to be pre-COVID levels. In fact, we have achieved the pre-COVID levels where the catering was contributing nearly 45% of the total revenue. Now it is 41% of the total revenue. So this margin, to my understanding, is going to continue. At this, we are going to settle here, but the absolute figures are going to be on a higher side. So the overall figures in the absolute number is going to be the same, but this revenue mix, of course, has changed. It was about to change when the normalcy was to be achieved. That is what has actually has happened.
Right, Ms. Hasija, let me dwell some more into that point of catering segment then, because the contribution of catering segment to your top line has definitely increased when you see on a year-on-year basis. Now the contribution is approximately 41% or so. Apart from that, even the contribution of packaged drinking water and tourism segments have also increased in your overall sales. If you would tell us, how do you foresee these segments performing going ahead? That is your packaged water, drinking water segment, tourism segment, or even catering segment for the matter of fact.
Our rail neat segment has performed very well. There we have achieved a good profit of nearly, it has contributed to nearly 3% in the total profit margins. And of course, major chunk has been from the internet ticketing segment. And in the tourism also, the contribution has been immense, and we have done better than many years in the case of a tourism because of the very good growth in the domestic tourism and initiatives taken by Government of India in terms of a Bharat Gaurav policy under banner Ek Bharat Shresth Bharat. There we have taken few rakes on a lease basis from Indian Railways, and now we have a dedicated fleet to operate in the tourism circuits, unlike the previous days when based on the intent we used to take rake on demand basis. Now we have these rakes available with us, and we are going to operate many trains, rather 3 times more the trains the way we were operating in the previous years. So our the in the tourism segment, the main reason has been this, and we did well in all the segments. In the train operations, in the Tejas segments, we did well, and we had received total turnover over of 150 CR in the train operation Tejas segment, where the profit registered was 25 CR. So it has been a very good margin that we have received, unlike the previous year where it was losing. And through our election special also, we have got some good margins. And state Tirath business, if you can see that, yes, there has been a considerable growth in the state Tirath business also because of the services and efforts taken by company. My team, the team has in the tourism has done very well.
All right, let's talk about Tejas then. What sort of a capacity occupancy are you looking at right now, and what's your outlook also for that particular wagon, that's Tejas?
Tejas, we have 2 Tejas in operation. One is the Lucknow Tejas and another is the Ahmedabad. Ahmedabad Tejas has received around 81% of the occupancy, and the Lucknow Tejas has received around 68% of the occupancy levels. So both trains are now started doing well, except for the few lean days. And we have.
Okay, Mrs. Hasija, we'll let you go on that. Thank you so much for joining us today on ET Now and helping with the growth outlook for IRCTC going ahead. So that was the management of IRCTC sounding bullish, and you can see that onto the stock price as well. And a weak market as well. The stock is holding itself in a green, just merely 0.5% gain over there. But let's move on and once again get back to the discussion we were having with our experts onto the MFI space, how that particular space is seeing a rebound as well as what is the growth outlook. We already had the take from one of our experts, Mr. Chokalingam, onto the show, but now let's go to Ashish and find out any of the stocks that he's finding good at this point in time onto the charts. Ashish, we heard Mr. Chokalingam's take on the four counters broadly that we are discussing. So any pick from the MFI space that is looking attractive to you at this point in time?
See, out of the stocks that we have discussed, I think Satin Credit Care is showing a very good move on the upside. It's breaking out, but the movement of the stock has been very volatile. So I would say one can trade the stock from a short-term perspective, expecting a target of around 190 on the upside, with support at 170. Apart from that, there are other few stocks, something like AU Small Finance Bank, which is looking very positive to me. I think the stock is shown a much stronger outperformance compared to the other microfinance companies that you are looking at, and the trend has been very, very positive. So we have also got the dip. So over here there is an opportunity to go long on AU Bank, keeping a stop loss of 747 for the target of 830. And if you look at also Power Finance Corporation, PFC, this is showing a very strong move on the upside. So I think from this financial space, PFC is a good bet to buy for from a little longer perspective also. And from a short-term perspective, one can maintain a stop loss of around 176.50 for target of 196. And if that is taken out, then possibly we might be headed towards 220 levels. So, and the third pick that I have is Ujjivan Finance. Ujjivan Financial Services right now is also showing a very strong rise. It has shown a cup and rounding bottom kind of a pattern. The volumes have picked up very well in the previous trading session. Today there is some profit booking, but that is an opportunity to possibly enter into the trend in this stock for the targets of 385 with a stop loss of 347.
Coming in from Ashish, which are the stocks that he finds attractive in the MFI space. But on that note, we'll actually slip into a break on this edition of Buy Now Sell Now. When we come back, we will start taking all of your queries. I know viewers are writing in, pretty upset that we've not started it. We'll start after this break, so don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now show, where we get take all of your stock related queries. I know already viewers have started writing in, so let me directly start taking all of your queries. The first query that I have is coming from Ghosh Dada, who's writing to us from Delhi. And Mr. Chokalingam, he's holding Adani Enterprises, Adani Ports, Adani Wilmar, all of them a very good quantity. He's also saying that he's making good profits in all of these counters right now. But should he go and add some more in his portfolio? Do you think that's an advisable move to do if you're already in the profit in this in these counters?
I'm extremely sorry. Unfortunately, I have not tracked our Adani stocks. So therefore, I am not in a position to give any view.
No problem. Ashish, have you tracked any of them on the charts? If Ghosh Dada is already making a profit, do you think it's advisable to add some more? Or what should his strategy be with these counters?
See, if you look at Adani Enterprise, yes, we can clearly see it has shown a good up move, but I think these stocks are going to consolidate. I would not recommend him to add more stocks of Adani Group, Adani Enterprise or Adani Wilmar, because the stocks have already shown nearly 50% to 61.8% retracement of the fall, and we can start seeing some consolidation or a dip again. So I would recommend continue to hold on to these stocks, existing positions that you have. Do not add on more from here. And for Adani Enterprise, there is a very important support which is going to be around 2,280 levels. And if it breaks below that, then possibly get out from this stock as well.
Okay, moving on. And Mr. Chokalingam, the next question is from Hamza, and she's holding 170 shares of IEX from a price of 237. At this point in time, any advice to average out this particular counter? She's a long-term investor. What should she do?
Unfortunate that she is losing a lot of money, but I would certainly not advise averaging it. Maybe hold it in case it improves even 10%, 15%. Try to sell and minimize loss, because there is a fundamental shift in the business. The competition is intensifying from BSE promoted joint venture, as well as it's going to be tough from even NSE ventures in the future. So therefore, I would suggest hold and then sell on any further rise.
This one is from Chandrasekhar. He's writing to us from Hyderabad. He wants to know EKI, Energy and MRPL. Are these good counters to buy or should he look to avoid altogether? Ashish?
See, if you look at MRPL, again, a very volatile stock, and also the K Energy as well. So I would not be very keen on holding on to these stocks or buying these stocks because uh, MRPL has shown a very deep decline and it has been consolidating for many months. When the broader market has improved, Nifty has improved, Bank Nifty touching lifetime highs. What I'm trying to say is that there is a buying across the board that we are seeing, but this stock has not shown much value out of it. So I would avoid both of these stocks. It's better to invest into something in the large cap names, something like a Kotak Bank, or if you're looking to invest, maybe an SBI, are much better stocks than buying these two stocks here.
Okay, moving on, and Mr. Chokalingam Bharadwaj is looking for an advice in Moltech packaging. He has got 35 shares at an average price of 980. Can he add more at these levels? His investment outlook is for the next 3 to 5 years.
I would suggest in case it corrects, then we may consider because stock has already multiplied many-fold in the last few years, and the good performance is in price. So I would suggest sell on rise close to 1,000, and if you want to buy at least after 10% correction, you can consider.
Okay, this one is coming from Raman. He's writing to us from Chennai. This one is directed to you, Mr. Chokalingam. He wants to know about Coal India and All Cargo. Are they good buys? If not, then what else can he look to buy?
Yes, Coal India, if there is any small correction, one can buy. In the short term, there will be a pain from the revision of allowances and all for the employees. Of course, it's a natural, but then it could impact the profits in the short term. So in case by any chance it corrects around 230, one can go very aggressive. And other logistic company, I am not that comfortable. I would not suggest All Cargo Logistic.
Ashish, what's your outlook on BEL? The stock has been moving up recently. RG Rao from Trichy is holding 600 shares from a price of just 55, a doubler for him. But can he add more at current levels? And for the next 8 to 12 months, what could be the probable targets?
I would first like to congratulate him because his buying is at a very good level at 55 and he's still holding on to it, riding the trend on the upside. The stock looks to be positive. I would not suggest to add more number of stocks at these levels. It has already shown a good run up even from 94 where the swing started, and it is already at 111. From the next 8 to 12 months, we can possibly expect a target of around 150 levels on the upside. That can be the target zone. And on the downside, the support for the stock is around 104. So continue to hold on to the stock for the target of 150. Do not add more, but hold your existing position.
Okay, this one is coming from Balakrishnan, writing to us from Chennai as well. 100 shares of Amrita Anjan. He's holding this for more than a year. He's currently in loss. He wants to know whether he should buy some more or sell. What sort of a future does this company have? What's your take on this one, Mr. Chokalingam? Amrutanjan is the stock name, not Samrat Pharma. Amrutanjan is the stock name. Yes, the stock also reported his earnings. But how's the future looking to you for this one? He's not told us a buy price, but he's definitely mentioned he's in a loss.
Yes, this company, good management, and it has got more than 5-6 decades, maybe even close to 100 years of history. But unfortunately, last 10-15 years, it has failed to grow. However, once in a while, the stock goes up substantially. We don't understand the reason. So if he's losing money, definitely he can hold on to it. I would not advise buy because valuation is stretched. But then tactically, whenever it jumps, above 700, he can sell and exit the stock.
Okay, moving on, and the next question is from Mohit. He has been writing to us almost daily, but we couldn't take his question. Thank you for the patience. And Mr. Chokalingam, he's holding 350 shares of Fortis from a price of 270 rupees. What's the outlook going ahead? His investment horizon is for the next 3 years. How do you find this particular stock?
I would rather, for next 3 years, suggest him to shift from Fortis to Indraprastha Medical in terms of valuation, dividend yield. Also the balance sheet, that is far better than Fortis.
All right, this one is coming in from actually a lot of queries have been pouring in for Mr. Chokalingam. Looks like all of our viewers have been patiently waiting for you, Mr. Chokalingam. But let me take this one also coming to you. But this one is for Krish. Sorry, this one is for Ashish from Krish. He has IOC 5,000 shares at a price of 85 rupees per share. He's also got some good dividends as well from IOC. But he wants to know, can he continue to hold on to IOC for a target of 100 rupees per share? What's your take on this one, Ashish?
Yes, the overall trend for IOC and in fact the oil marketing companies are doing very well if you look at BPCL or IOC itself, and the trend has been positive. So 100 target is possible on this stock, and on the downside it can keep a support of around 10 days moving average, which is coming around somewhere around 87 rupees. So keep 87 as a stop loss for his positions and 100 rupees as the target. So risk reward is also favorable with a 3 to 4 rupees downside and a 6 rupees on the upside, possibly 6-7 rupees on the upside is possible. So over here, hold on to the stock.
Okay, moving on, and Ashish, once again coming to you, the query is on United Spirits, and this question is from Pradeep from Kolkata. He's holding 20 shares from a price of 844 rupees at this point in time. Is this, will that be good to book profits, or should he continue to hold on?
See, United Spirit has shown a very strong rise over past 4 to 5 trading sessions. If you look at the chart, we can clearly see stock has moved from nearly 800 to 870 levels over short term. It is overbought, so some consolidation or dip is not ruled out. I would suggest book partial profits over here. Some profits can be taken off the table, and remaining keep trailing it using a prior day low as a stop loss. So as long as it does not close is below the prior day low, continue to trail it. For now, he can maintain a stop loss of around 858 on the downside, book partial profits and trail remaining with 858 as a stop loss.
This next one that I have is coming in from Puneet. He is asking whether he should look to buy Samvardhana Motherson or Motherson Sumi Wiring for the long term at current levels. What's your take, Mr. Chokalingam, on either of these counters? Which of these counters should Puneet look to invest in?
The first one, Samadhana Motherson, I just looked at the results. I think for long term, it's a good stock. I mean, the phenomenal build-up in the top line and across the world. So for long term, definitely it's a very good stock.
Mr. Chokalingam, once again coming to you, the question is from Kalyana Sundaram from Madurai, and he is holding 250 shares of GNFC from a price of 650 rupees. What to do in this particular stock, and how are the fundamentals looking like for this one? He's at a loss. What should be the strategy?
Yeah, before giving advice, suggestion, I want to say that I also personally hold it. The stock has already crashed a lot in the last 2 years, sitting on couple of thousand crores of free cash, and even after reduced to profit, it is trading at a very poor single-digit PE. I am 100% confident that the day will come when earnings again the exponential growth would be there, because a lot of expansions are happening, and it's a monopoly in many chemicals also. So definitely one can even buy at this price, and I am pretty confident on the outlook of GNFC in the medium to long term.
Okay, this one is the next query that I have is coming in from Vidya, who's writing to us from Singapore. She wants to know about UltraTech Cement at current market price. Should she look to book profit, buy or hold? I'm not sure what her buy price is, Ashish, but the fact she's saying that she should she go ahead and book profits, I'm guessing she's making good profits in this one. What should her strategy be now for UltraTech Cement?
I would suggest to book some profits because we are seeing some slowdown in the momentum. There is divergence on the RSI, which shows that the upside momentum is reduced. But I would suggest not to book out entirely. The trend is positive, so book partial profits, and remaining we can expect a target on the upside around 8,300 levels. That is the target where she can then book the remaining profit.
Okay, Mr. Chokalingam, Cheryl is right that a lot of viewers are excited. One such viewer is Satya. He says that you are his favorite fundamental expert, and in the excitement he has written a lot many queries. I could take only one. Mr. Chokalingam, what's your advice on Heikel? He has bought the shares at a price of 380 rupees. Any targets for the next 3 to 6 months in this one?
I'm extremely sorry. I have not looked at the latest results, so I'm not in a position to give suggestion.
Okay, Mr. Chokalingam, then any advice on Goldium International? His buy price is 165.
I am not comfortable on the company.
Okay, sorry, Satya. Cheryl, over to you.
All right, let me take this one to Ashish then. Anupam Malik, who's writing to us from Kolkata. Ashish wants to know about Himmat Singh's side. 90 rupees is the buy price, 500 shares. He's saying he can hold on for the next 6 months or so, but he wants to know what's the prospect for this particular counter.
See, Himmat Singh side in today's session actually is huge volume if you look at the stock, and it is giving a very strong breakout on the upside as well. So I think the stock can be headed towards the level of 105, which is the pattern target. Continue to hold on to the stock here, and 105 is the target. Looking very positive for now, and on the downside, the stop loss can be maintained at 88 rupees.
Okay, Ashish, what's your outlook on HDFC Life? This particular counter is in focus today. Rajesh Maheshwari from Singapore is holding 300 shares from a price of 330 rupees. What's the outlook going ahead?
I think HDFC Life is, if he's holding from 330, that's an excellent hold because the stock is nearly doubled from that. And we can clearly see today it's showing some kind of a profit booking from higher levels, but nevertheless, the overall trend remains positive for the stock. I think overall life insurance companies can do much better from here on. The cycle has turned on the upside, and HDFC Life can touch the target of even 650. So hold on to the stock here. The support for the stock is at 570 for the target of 650.
This one is coming from Himmat, and he's asking a query to you, Mr. Chokalingam, and I feel it's a tricky one. 1,000 shares of Suzlon. He's holding since 7.81 rupees per share. He wants to know what's the perspective on this particular counter over the next 2 to 3 years. He's already making very healthy profits on his holding. Should he look to book from profit and add at current levels? Do you think Suzlon is worth that risky a bet for the next 2 to 3 years?
I think one should, since he's making profits, he should sell, for a very significant rise.
Yeah, that's the outlook on Suzlon. But with this fears, it's time to slip into a short break. But don't go anywhere. We'll be right back and we'll be taking more of your stock-related queries. Stay tuned. Welcome back. You're watching Buy Now Sell Now on ET Now, a show where we get you answers for all your stock-related queries from our experts. And the next question that I have is coming from Parvinder. And Ashish is holding shares of La Opala, 70 shares from a price of 496 rupees. Currently at a loss. He can continue holding this for the next 6 months. Any hopes on recovery?
See, right now I would suggest he can continue to hold on to La Opala. The stock has shown some bounce back on the upside, but he shouldn't be too optimistic. It can continue to go in a range. On the upside, 420 is where he can possibly look forward to exit the stock, and 370 can be the stop loss.
All right, the next query that I have, actually, I don't think I can access the system. Shrishti, you would like to take? Yes.
Yeah, sure. Moving on, and the next query, Mr. Chokalingam, is on Engineers India. KU Raval is holding 100 shares from a price of 93 rupees. Can he exit at this point in time, continue to hold on at any targets for this one?
He can exit around this level unless he is willing to hold for another 2 to 3 years, because it's a great company, great balance sheet, lot of cash, but performance and stock price keep fluctuating widely. So therefore, at current level, you can start booking profits.
All right, this one is coming from Akhil. He's writing to us from Delhi. Apologies, Akhil. I know you've been writing to us constantly, but this one is for you, Mr. Chokalingam. He has 1,200 shares of IRCTC at an average price of 692 rupees per share. Also, he has NDTV 630 shares at a price of 237 rupees per share. Not for trading, but for investment purpose. He wants to know for both of these counters, should he continue to holding them for the longer term?
NDTV I don't track, but certainly I just now looked at IRCTC. It's trading at 49 PE, and also the major revenues from internet ticket booking. Obviously, that should get a better valuation, but that segment is not showing a significant growth on year-on-year basis. So the PE is slightly stretched. So unless he is a really very, very long-term investor willing to hold for 2 to 3 years, then he can consider selling at current price. Otherwise, he can hold for 2 to 3 years, and definitely the long-term prospects will look good for IRCTs.
Okay, Mr. Chokalingam, Subramaniam is holding 20 shares of Tata Coffee from a price of 215 rupees. Whether to hold on to this particular counter or make a switch, what will be your advice?
I am not sure whether it is a standalone. There was a proposal of merger. He can, hold on at current prices.
Okay, this next query that I have is coming in from Shrikant, writing to us from Hyderabad. Birlasoft 200 shares of the price of 450 rupees per share. Ashish, should he continue to hold or average, and if average, at what levels?
No, I would say continue to hold. Right now, do not try to average the stock. We can clearly see a good run-up has happened in the stock from that 260 levels to around 340 right now. So continue to hold on to the stock. We can expect it to go towards the level of 370. The overall trend remains positive for now. On the downside, the support for the stock is at 320 level. So hold on to your existing positions. Do not try to average anything more.
That's the outlook on Birlasoft. But with this, viewers, let's kickstart taking all your queries in the rapid fire session. And the first question that I have, Mr. Chokalingam, is from Vishwanathan Nair, holding DLF from a price of 353 rupees. Is this a good time to book profits?
He can book profit in DLF.
Okay, this next one is coming in from Mukund from Hyderabad. He wants to know whether he should buy Landmark car at current market price. What's your take, Mr. Chokalingam?
No.
Okay, Mr. Chokalingam, Yudhvir has bought Schaeffler India 50 quantity at a price of 2,850 rupees. Investment horizon is for the next 6 months. Your view?
It's a sell for short term.
Okay, Ashish, Aditya Birla AMC, 100 shares price of 712. KVS Money is holding on to this one. What should his strategy be?
Continue to hold on to the stock over here.
Okay, Mr. Chokalingam, Maharashtra Seamless is what one of our viewers, didn't share his name, is holding at a price of 430 rupees. Can he add more for the next 2 years?
Yes, long term looks very good for Maharashtra Seamless.
Okay, Padmaseva Rao from Bangalore booked profits in Vector Foods. At what price can he look to enter again? What's your take, Ashish?
I would say to avoid the stock to re-enter into it over here.
Okay, Mr. Chokalingam, do you track Kamadhenu Ventures? Poonam has bought shares from a price of 221 rupees. Any advice?
Really, no, I haven't tracked it.
All right, this was coming from Geeta from Chennai. 40 shares of Kaveri Seas, 533 rupees per share. What's the prospect of this one? What should our strategy be, Mr. Chokalingam?
Hold.
Okay, Ashish, is this a good time to add HDFC Bank? And if yes, then at what levels? This question is from Sri.
Yes, you can definitely add HDFC Bank and at the current levels and even more on dip towards 1580.
Okay, this one is coming from Mayank and he wants to know about Asian Paints versus Pidilite. Which one is a better one? What's your take, Mr. Chokalingam?
Between these two, if given option, then paint is better.
Okay, Mr. Chokalingam, your advice on Rolex ring. Krishna Murthy is holding 15 shares from a price of 1900 rupees. Can she add more at current levels?
No.
Okay, and with that, actually, we've come to the end of the rapid fire as well as query segment. Thank you so much, Ashish, as well as Mr. Chokalingam, for joining us on the show, giving us your take on the MFI space as a whole, as well as resolving all of our viewers' queries. And viewers, thank you so much for tuning in. Yes, apologies, was a truncated query segment, I'm sure, but we will make up for it. But for now, we are totally out of time on this edition of Buy Now Sell Now. Goodbye from Shrishti, myself, and the team that put the show together. Stay tuned. Markets at noon coming up next.